Okay, it looks like we're live. Hello, everyone. So we took a week off. Well, we took the Sunday off last week, so we're back. And Clive is coming on in probably about 10 minutes. I'm a little early as usual. If you're watching this recorded, skip about 10 minutes from now, because this is what I usually do. I say hello to everyone that's on the chat. We've got Joe Campbell, Scoobyism 3, Pablo Pina, Jillian B, Drew Beer Hashin, Neil's Han Dynasty. He says, I thought BRICS were running things. Well, they're running their own business, I guess. Scoobyism, so no gold. Joseph Mary Morich, good evening. Steve McCrae, hi Steve. Spock 2024, Bugsley Malone, Becky Forbes, hi Becky. Boris Perez, Jim Tillapaw. Yeah, quite a few of you here. Gianfranco Bergagna says, Buonasera ragazzi. Manic Miner. Yeah, I haven't had Clive on for a while, so it'll be good to hear from him what he thinks about. I mean, there's so much going on. I could have picked another title for the live stream about the banks or about what's going on geopolitically, but I picked the debt ceiling, what's going on as well with the markets. Mario, do you think Powell will pause the next Fed rate date? How will this play into gold and silver? Well, short term is very hard to say what gold and silver are going to do. I think longer term, the dollar and all the other fiat currencies, you know that I've been saying for years that they're going to zero, and I haven't changed that. But we'll touch upon that because there's some comments by actually the thumbnail of this live stream. I put a Neil Kashkari on it, and after I used that thumbnail, I saw that he made a comment about the next meeting. So we're going to look into that. Let's wait until Clive comes on. So the title of the live stream is Uncle Sam about to tap an infinite amount of Fed cash? And the reason I did that is because they can. The Fed, as Kashkari said, and I think that was a few years ago, maybe a year and a half or two ago. And since then, he's become a bit more hawkish. He said that they have an infinite amount of cash or credit, and they do. I mean, the Fed went from a balance sheet of just under 4 trillion before 2020, before the crash in March of 2020. They increased it by 6 trillion almost. Where do they get all that from? Well, they typed it onto a keyboard. So that's how the Fed works. So that's what we're going to cover. And of course, we're going to cover what's going on in terms of the debt ceiling, how really, that's going to impact things in my view, and we're going to hopefully get Clive's opinion on it. Prickly Pete, he says, buy gold, folks, for wealth preservation. Yeah, gold is the best insurance against the currency debasement. And in the current, since 1971, it's been the best currency. There you go. There's no, it's not like the data point to it. You know, the dollar's lost 98% of its value since 1971. James Hafford, is this what Rafi refers to when he says gold price goes to infinity because no amount of fiat will be able to purchase any gold? Well, when a currency collapses, when people have no confidence in the currency, People who have real things will not accept that currency. So yeah, that's what happened. It just means that the dollar is toast. Matthew Liz Wanizo, does this mean that after the currencies collapse, the Forex market will significantly reduce or go to zero? Well, prior to 1973, the foreign exchange market was not as active as a casino that it is today. And London dominates actually the Forex market, London and New York, because prior to 1973, money was a fixed weight of gold, a fixed weight, and it was a measure. It was like an inch. We don't trade the inch or the pound or the kilo or the mile every day. And yeah, hopefully that's what will happen. That a gram of gold from China will be the same as a gram of gold from Italy or wherever. A foreign exchange market shouldn't be what it is today. They call it a free floating free market, but it's not really. It's just a cover. It's a casino. Can you imagine if we had to trade the inch versus the centimeter every day? That if it changed every day, it would be really a hectic world. Or trade the conversion of Fahrenheit and centigrade every day. And that's what the foreign exchange has become. It's a casino, and it's really bad. Hopefully it will disappear, the Forex market. What's the best way to stack gold? Well, well, it's like stacking silver. You just put it, you see, there you go. If you change that for gold, that's how you stack it. You put it one on top of the other. It's not rocket science. You got to start somewhere, though. I had no clue prior to 2002 where to get gold and what to do, what to buy. But I just did a bit of research. Back then they had Google. You could search already, and you just got to dip your toes into the water. What's happened to LIBOR? I don't know. They're trying to phase it out. LIBOR is like a reference rate. We'll see what happens. I'm not really following that much, but it does impact a lot of derivatives, trillions, if not hundreds of trillions. Gianfranco Bergani, tell us the truth. Rafi is used to psilocybin. I don't know what psilocybin is, or anyway, maybe you can tell me. Jeff Noobs says, I think the dollars soars soon. Against what, Jeff Noob? Okay, Clive is here. Let's admit him into the Hi, Clive.
Hello, Mario. Can you hear me?
Yeah.
Oh, you can't hear me. Okay, you can't see me. Let's go.
Yeah. Oh, now I can see you. Yeah, I've already. I'm live already. I usually start a little early, so yeah, we're having a chat with the people on the with the viewers on the chat box. So there you go. So don't know if you. How are you anyway?
Well, I've had a 8.5-hour journey back from Italy today, so quite a tiring journey. It should take about 2.5 hours, but it's a holiday weekend this weekend in Switzerland, and an awful lot of people are going through the various tunnels.
Yeah. So were you in northern Italy or?
We went to Torino and some smaller towns like Alba.
Oh, I see.
Asti.
Yeah. Oh, no, there's some wine in Asti, isn't there? Asti wine.
Oh, yeah, very, very popular. Yeah, we tried that.
So, Clive, the title of the live stream is Uncle Sam about to tap an infinite amount of Fed cash. And I've got a thumbnail of Neil Kashkari I think a year or two ago. He said, well, the Fed has an infinite amount of cash. And I wanted to see what you think about what's going on, all this back and forth about the debt ceiling. I think eventually they'll sort something out, because politicians, they have to keep going. And without a treasury to spend money, they can't keep going. So what do you think? I know it's a hard question. Where do you think we are, and what are your views on what could happen?
So the Democrats and the Republicans can't agree on whether or on the debt ceiling. Basically, both sides want to raise the debt ceiling, but the Republicans want to make it conditional on some spending cuts. And President Biden, who's a Democrat, has basically said these spending cuts which are proposed are outrageous and disgraceful and shouldn't happen. Having said that, my personal opinion of these spending cuts, they're being very, very soft. I'm referring to the Republicans here. So the Democrats are even softer. Frankly, it's not enough. It's barely scratching the surface of trying to get the national debt down. It won't get it down. It'll just cause it to increase by slightly less. And the kind of spending cuts which are being proposed by the Republicans are basically things like saying able-bodied single people who are capable of working should no longer be entitled to Medicaid unless they work 60 hours a week or something like that. They're perfectly reasonable spending cuts. So I'm quite surprised that the Democrats and President Biden are saying that these are outrageous cuts which should never be allowed. But they've had a meeting this Sunday morning, I think it was, he was in Japan, President Biden, and the latest news I saw a few minutes ago was that the two sides definitely can't agree and they're further apart than ever. So the suggestion is that maybe they won't be able to raise the debt ceiling. Now, President Biden does have some emergency powers. I'm not sure where that under what article that is, where he could unilaterally do it.
Yeah.
But he has said today that he thinks he's run out of time.
Yeah, I think there are people suggesting he might use the 14th Amendment, which was passed after the Civil War, and that was to do more with the debt of the United States and the old Confederacy. The debt that the Confederacy, I think, incurred was going to also be the debt of the United States, and he would use that as a way of saying that he, the 14th Amendment, which would be a silly thing to do. It's like using something totally irrelevant to this fiscal situation, but technically he could use it. And a lot of people think that it could create a havoc in the markets, because that would just open that wouldn't stop any limit to the debt ceiling. And there's been a lot of back and forth, and talking about Kashkari as well, the guy that's on the thumbnail. I think, and I'm going to share this with you, Clive, and the viewers. I've got my Twitter here. So this was about 4 hours ago, and Kashkari had become quite a hawk, and so now he's saying Fed's Kashkari is open to foregoing June rate hike. Wall Street Journal, and we saw yesterday on Friday as well. I don't know if you're following things when you're away. That Powell said that they might not hike as many times because of credit conditions. So it does, if push comes to shove, if there is, I think, some kind of crisis towards about the debt ceiling, I think eventually when they sort things out, the banks are going to be in really bad shape, because I think the Treasury was helping the FDIC. And that's another thing as well. And you can see here as well, Zero Hedge tweeted McCarthy, Biden's position in debt limit talks has shifted. McCarthy seems Biden wants to default more than wants a deal. So yeah, what do you think about Kashkari's comment about how the banking situation is and how it could be affected by all this?
So the Federal Reserve has basically acknowledged at last that the large rise in interest rates has caused immense strains in the banking system. The reason for that, all banks, every bank, has a simple policy of borrowing short and lending long. And the reason they're doing that, which to my mind is completely ridiculous, is to do with what's happened over the last 12, 13 years since 2008. Before 2008, we had relatively high interest rates, and all banks and building societies and such like would offer their investors the equivalent of term deposits. And you could put your money in deposit for 6 months, 1 year, and that helped the banks match their assets with their liabilities. Because their assets were mortgages and loans to companies. So if you put your money on deposit for 6 months or 1 year or 3 years or 5 years and under higher interest rate, the bank could, from a maturity point of view, match it up. But after interest rates went to zero, people got in the habit of just leaving their money on current account. And now we're back to rising rates. The banks haven't got into the habit of saying to their investors, put your money on 5 years or 3 years and earn a higher interest rate, because they're trying to maximize their profits by keeping people at the short end and earning literally nothing. But that's come back to bite them, because now they're completely mismatched in terms of the maturities. Their liabilities are short-term liabilities and their assets are long-term assets. And the trouble with long-term assets, when interest rates rise, which is what's happened, their value of those long-term assets go down if you market to market. So we have a situation where all banks have a lot of long-term assets which have gone down in value, and a lot of short-term liabilities which could be demanded by tomorrow if there's a rumor about the next bank. So the Federal Reserve has acknowledged this, and I think that we're now in a situation where the Federal Reserve is hinting that they're not going to raise interest rates at the next meeting in June. It doesn't mean to say they're putting it on pause forever, but it gives the market another month of respite without another horror story of rising rates.
So, yeah, I had retweeted this here from Jim Rickards. He said about the 14th Amendment, just going back a little bit on that, says a stupid idea, but not surprising coming from the feeble-minded Biden. 14th Amendment debt clause is really about distinguishing U.S. and Confederate debt in post-Civil War context, nothing to do with debt ceiling. Using it throws entire market into chaos. So, yeah, I think it will be an interesting next few days, actually, because I think the U.S. Treasury is down to around 60 billion last I saw. So yeah,
I haven't checked the figure for a few days. A week or so ago, it was about 250 billion, and it was running out fast.
Yeah.
So if it's 60 billion, it's disappearing quickly.
Yeah. And how do you think? Because we're told that the treasuries are the risk-free asset that every financial asset on the planet is priced off. And if that freezes, I mean, if they stop paying interest on that, because I think there's quite a bit of like 18 billion or something coming up till the middle of June in coupon payments, that I think the Treasury as well, think they pay semi-annually, don't they? And a lot of times they pay in the middle of June. So how do you think it's going to impact? It could be really chaotic, couldn't it?
I'm far from negative on what will happen if they default. And of course, we don't know that there'll be a default. But if there is a default, I don't think they're going to default on the US government debt. I think what they'll do is slow down payments to Social Security or government employees, or if you go by history, in history terms, it's been the army which doesn't get paid. And I'm all for that. Less money for them to go and fight wars. I'd be totally in favor of that. But the decision as to who doesn't get paid is not going to be made by Janet Yellen. She doesn't have the authority to do that. The decision as to who will not get paid will have to come from the president. And that's, in a way, why he's pretty much on the hook, because he knows that if the debt ceiling is not raised, it will destroy his chances of re-election. That's the first thing. And secondly, he's going to be on the hook to decide that someone doesn't get paid. And whoever he chooses isn't going to like it. And we're going to see a lot of protests about it. I kind of think he'll go to agree with the Republicans at the end of the day.
Yeah. So, and I saw McCarthy speaking a few weeks ago to the New York Stock Exchange, and like you said, he's not really cutting anything. He's just discretionary spending. He's raising it by 1%, and so I don't think it's going to make much of a difference. So I was going to ask you something.
I mean, I think the bigger picture here is it doesn't really matter whether the Republicans' bill goes through or President Biden gets to raise the debt ceiling without any spending cuts, because in both cases, the national debt of the United States is set to grow dramatically over the next decade, quickly passing a point of no return. I mean, we are past the point of no return already, actually, but it will, because interest rates on debt which is maturing will be at higher rates than the historical levels of about 2.5. The ability to control the level of debt will quickly spiral out of control in the next decade. And I think that will basically bring down the necessity to do something with the currency. And we've talked a little bit about the currency reset, which has happened in many poor countries, but it's time for it to happen in some Western countries, I think.
Yeah, and I didn't know that it was the president himself that decided who gets, who doesn't get paid. And I've listened to a few other people on YouTube, JSnip4, who was a guy that I used to follow a lot when I started my channel. And he said that they could decide to stop EBT, which is, I think, the cards used for the food stamps. Can you imagine that? If I mean, that would be riots. I would think that wouldn't be a good thing.
I would think that's a dangerous move.
Yeah, that would be a dangerous move. But the thing is, Joe Biden is so out of it. I saw a clip of him in Japan, and he said, "Oh, I balanced the budget." They're running, and he said, "And I cut the deficit by 1.7 billion." And I thought, wow, that's nothing, 1.7 billion. So he could, he could be there and say, oh, what's this EBT? Just stop that, and he's so out of it, but maybe someone will like point it out to him. You shouldn't do that. But what else? What about, what do you think would happen to the banks? Because if the FDIC is being financed by the Treasury and the Fed, if there is like some kind of halt to the Treasury's operation, that could affect the FDIC and the banks as well, couldn't it?
Well, certainly everybody's relying to some extent on the $250,000 guarantee, which might be unlimited because they've kind of left a hint that it might be unlimited, but they haven't said it clearly. But of course, the money is not there except enough to support a very, very small proportion of the deposits in American banks. The question is, will it reach a point where people actually are sufficiently motivated to withdraw their money from banks and put it into treasuries, which they would see as a safer investment? And if that happens, it's also a higher interest rate investment. If that happens, of course, the banks will be in trouble because they've got a liquidity crisis, and it depends which banks get the money withdrawn fastest will be next in line. But
why would you?
There will come a point where they can't pay.
Why would you put though your money in treasuries if the treasury is defaulting. That's kind of a.
Well,
I know
I
what you
mean,
mean because
I laugh. I laugh. You're exactly right.
yeah. The other thing I listened to Stan Druckenmiller. I think he spoke at the University of Southern California a few weeks ago, and he could be right. He said this debt ceiling crisis is like a 20-foot wave, coming into Santa Monica Beach, while the what you said about the debt, that it's going to be almost at 50 trillion in 10 years time, and that's the one just held by the public. He said that is the big tsunami and no one's like focusing on that. So I think this crisis could be like a distraction, and then when they solve it, I think the hope of these politicians and the administrations that when they solve it, everything's fine. People will flow into the system, but I think it's a big mistake. What say you?
Well, according to the Congressional Budget Office, the plan is the public are going to buy virtually all of the national debt, which is issued over the next decade, and that's 12 or 13 trillion. It's a huge increase. It goes from 20 to over 33 trillion of debt held by the public. But the public are not going to buy more than 50% of new national debt unless they get much higher interest rates than they're getting at the moment. It just won't happen. So the alternative is for the Federal Reserve to buy that debt, which obviously means quantitative easing again. And if the Federal Reserve buys that debt, it will be highly inflationary and pretty bad for the dollar, very good for gold.
Yeah, and I think people will finally realize that, like Von Mises says, eventually people wake up and see that the policy is one of inflation and they will never be able to stop it. And the other thing I think that is going to make it harder for the Treasury to finance all this debt is that foreigners are becoming less and less keen to buy this debt, and all the de-dollarization. And maybe we could go over into the G7. I don't know if you've been following this, but they seem to be wanting to ostracize and reprimand China, which I think it's a bit not the best thing to do because China is one of the biggest creditors.
So I haven't really been following the latest news on the G7, but it is clear from things I've been reading that there is a generalized move to try and have less emphasis on trading things in the dollar and using more domestic currencies, whether it be the Brazilian real or the Chinese renminbi. And there's quite a lot of countries now joining up with the BRICS to try and do that. I don't know if there's any reaction from the European countries on this in this direction. I haven't heard anything specific yet.
Yeah, I've got something here. Let's see. But at the same time, Biden just said that things are thawing. The relations with China are thawing. But let me just play for you and the viewers what the Prime Minister here. Well, actually, I haven't got the video, but someone wrote it down. And this is what Rishi Sunak said from Japan. China represents the biggest challenge of our time to global security and prosperity. So basically he's saying that China is the biggest threat to security and prosperity, which I think is pretty crazy. And I saw in the FT, but then you see Joe Biden expects imminent thaw in China relations. U.S. President optimistic. But the G7 communique, the announcement was not very friendly, and China even came back and replied and said, basically countered it. So I don't know what they're playing at, but like you said, though, even if China continues to buy Treasury, I think the U.S. will have to pay a lot more. And I think eventually this, however this crisis is solved, it could hurt America's credit rating, don't you think?
I think the markets are getting more and more nervous. We see that on a day-by-day basis. I've seen that the credit default swaps are again pushing towards new highs, and I'm pretty sure based on what's happened this Sunday, they'll be hitting new highs on Monday morning. I'll just bring that up for you. That's the 5-year. I don't know if you can see that. The 5-year credit default swap. You can see it's pushing on at a record level, meaning that the probability of default in the United States is now considered to be higher than it's been any time, well, as far back as I can see on this chart, back to 2017, if you add them on the bottom scale.
Yeah.
So people are nervous. I don't know if that will definitely happen, but the probability is growing, and that's my assessment. It's growing. I think they will reach an agreement, but it's not. It's less certain than it was 2 weeks ago.
Yeah. Oh, the other thing, let's switch over maybe a little to silver, because it looks like a lot of silver is being drained out of the Shanghai Futures Exchange. So here's this guy here, Bai Xiaojun. He covers a lot what's going on in the Shanghai Futures Exchange. And he also said here, the National Bureau of Statistics of China recently released economic data for April. Solar cells saw a significant year-on-year increase of 69.1%. The market believes that it is one of the important reasons for the big decrease in silver vaults on the SFE recently. So that seems pretty interesting.
Well, all I can say is if I was Saudi Arabia producing fossil fuels, it might be a very good move to buy a lot of silver for the Saudis as well, to make solar panels for when the oil runs out one day. Of course, they're not doing that, but China certainly seems to be.
Yeah, I think there's another country though, I think it's the UAE, United Arab Emirates. I think they're building they're like switching to nuclear and other kinds of energy, which seems quite prudent, I would say. But here you go. There he is again. He was tweeting that, I think it was a couple of days. So there's the all the silver going out of the Shanghai Futures Exchange, which seems pretty interesting. So, and this seems to have
I think
recently.
I think the interesting thing about silver is for many years, at least a decade, there's not been much increase in the production of silver, but the demand for silver for industrial use and so on has been rising. So right now, for the last couple of years, the silver mined is not enough to meet the consumption of silver, and the difference has been coming out of recycling. So people are bringing in their knives and forks to be melted down and things like that. But of course, you need to have a higher silver price if that's going to continue. If we're going to continue to have mine production stagnant and demand for industrial use going up, which is the situation, we've got the automotive industry likely to use a lot more silver in the next 30, 40 years. And the photovoltaic industry is also increasing rapidly. It's about 5 or 10% a year increase, with no increase in mine production to compensate.
The other thing I thought about, that silver is a really good antiviral, against infection, isn't it?
I've heard about that. I have no idea if it's true.
Yeah, I know. William asks, please can you comment how much of the CCP economy is due to copyright or patent theft? Well, see, what do you mean CCP? That's the Communist Party of China, but I guess that's the equivalent to the two, to the Democrats and Republicans. That's like a one-party state. But I don't know, from what I know about China, is that a lot of foreign companies that want to go there, they have to be 51% owned by China, by a Chinese company. I don't know how it works. Do you know how it works, Clive?
I don't actually know that, but I know that historically the Chinese were well known for getting Western companies to come in, start producing stuff, and then they'd rip it off and produce it themselves.
I see.
So that's kind of how they got a lot of the production in China going, by using Western technologies, which
Yeah.
presumably was ripped off technologies.
Yeah. Well, I guess the West has ripped off quite a lot of countries as well in terms of resources. So, the US has been,
Yeah.
invading countries for their oil and forcing them to accept paper for resources. So it all equals out. I'm not defending the Chinese for doing that, but the Chinese economy, I mean, I think it seems to be picking up again. I don't know if you follow that.
Well, they've come out of a big COVID lockdown and everything ground to a halt for a few months. So yes, it should be picking up. And I buy a lot of stuff on AliExpress and places like that, which comes out of China. And there was a time when it took several months for it to arrive during the COVID era, and now it's coming in the expected 2 or 3 weeks, which is so certainly things are speeding up and production's back to full speed again.
Yeah. Becky Forbes says, I keep reading reports of the untold amount of derivatives in the global economy are very, very unstable. Yeah. Hi, Becky. I've spoken. I'll answer first, and then I'll let Clive give his opinion. I have a derivatives playlist on my channel, and I've been speaking about it for years because I was a futures and options broker in the city, which is a kind of derivative. It's an exchange. I did exchange traded derivatives, but the big disaster probably will come from the over-the-counter derivatives. And yeah, there's speculation that there's more than 1,000 trillion in notional amount, the size of the bets. And the problem with derivatives is that they are off balance sheet, and especially the OTC, they're not regulated. No one knows who's got how much, and it's a mess. And yes, the leverage is the problem. Clive?
The biggest part of the derivative market will be the foreign exchange derivatives and the interest rate swap derivatives. And problems occur in derivatives when there is a very large price change in something, because when something changes big time, there's always going to be someone at the wrong end of it. And that's not necessarily a problem until the person at the wrong end of it can't pay. And if they can't pay, your counterparty, which might be the bank sitting piggy in the middle, is expecting to receive a payment from somebody who can't pay, and they've got to pay on that to the person who's at the other side. Because don't forget, at the end of the day, the banks, when they're dealing in derivatives, they will be perfectly balanced. They'll have as many longs as they have shorts, and so everything should match up. But
it's only
if
when
one
there's
side
a
doesn't pay,
yeah.
That would cause a problem.
Sorry.
So I think what we've got to watch out for, if we see a sudden lurch in an exchange rate, let's say in cable, that's dollar sterling or dollar euro or dollar yen, if there's a huge change in a major currency pair in a short period of time, you've got to expect some bad news to come after that, because someone somewhere will have been bankrupted by it.
Yeah, and the other thing, Becky, derivative is basically a side bet on an underlying asset. And I think it was Professor Facchetti. I think he's passed on. He's of the Austrian school, he's a proponent of the Austrian school. And he always thought that this growth in derivatives is part of the fiat currency game, because to keep all the prices manipulated, you need the derivatives to bet on it. And I think if we see an explosion of the derivatives market, we could be very close to the end of the fiat currency system. The other thing as well, last October, September, October, when gilt prices collapsed, that led to almost collapse of that liquidity driven in that investments, LDI, and it almost brought down the private defined benefit pension system in the UK. So yeah, Clive is right. Keep an eye on the foreign exchange market, the main currencies, and also government bond markets. If you see them fluctuating a lot because they're supposed to be very stable, that could hugely impact derivatives. So there you go.
Haven't we just seen the Tesco pension fund blow up? I think I read that the other day.
Which one?
Tesco.
Has it? I didn't know.
I read that they.
Yeah. Okay. I love, let's see if there's some more questions. Much hype about next potential pandemic. Okay. So, Clive, what about silver in Switzerland? Are you seeing the premiums pretty high there too, or is it pretty easy to get still?
The premiums are broadly speaking at global levels, but what I recommend people try and do is develop a good relationship with someone who gets the silver in. In my case, I'm going to call it a silver dealer, but actually it's a pawn shop where people bring stuff in, and if you get a good enough relationship, you can get your price down to a very reasonable level. I tend to pay about 15% over the silver price for nice quality silver coins, which I think is below the going rate. I mean, silver, broadly speaking, is trading well above spot everywhere. The spot price is determined by the futures, but if you're buying coins or small bars, you're going to be paying 15, 20, 30% higher. That is the norm.
Yeah. Okay. Someone asked here if I know the proportion of interest rate swaps, what part of derivatives that is. I think it's almost like 60%, so it's quite significant. I think that was Gianfranco who asked that. It's
nobody can really know these numbers, but it's going to be high. It's high.
Yeah. Interest rate swaps are huge. Credit default swaps. Yeah. Someone's asked me to show Rudy. Well, he's not here. He's in the living room right now. So he's doing well though. Clive, okay, let's have a look. What else can we, that's in talks. Anything, anything you're seeing, like what about the Fed's balance sheet? Are they continue to lose a lot of money? How do you see the, because I've noticed lately the gilt market, interest rates here in the UK have started picking up again. They've broken through some key levels, and they're almost approaching where we were last year during the crisis. What's your view on interest rates and what could happen? And do you think that would trigger central banks to shift their, out of QT?
I think a lot of people are very obsessed by the official interest rate of the Federal Reserve or the Bank of England. I look more at the one of the things I actually own very, very small quantities of are the ETFs, which invest in investment grade corporate bonds and in high yield corporate bonds, which are not really influenced by Federal Reserve buying and selling and influencing the prices. What I can tell you factually is that these ETFs have been going down in price, meaning that the interest rate on corporate bonds in general is rising. And I think that's where we are at the moment. It's we're seeing rising interest rates despite the short end predicting lower rates.
Yeah, I mean, apart from the Fed and Bank of England rate, I watch as well the gilt, the 10-year and the 2-year. The 2-year is the one that they use for mortgage rates, and that recently has broken out. So I think there could be trouble ahead for the real estate market. And it's funny because I was speaking to a couple of people today when I was playing golf, and they were in the city of London, and they were, or Canary Wharf, and they're surprised that there's still so much commercial real estate construction going on, and it's crazy. So just wanted to know your opinion on the real estate and commercial real estate and how it could affect things, and especially the banks.
If I'm generous to the commercial real estate market, I would say it's probably worth 35% less than it was a year ago. I think more realistic figure is somewhere in the region of 50% less, and potentially in some cases negative. In other words, some real estate won't be worth a pound. And the reason for that is if you own real estate, you have to, be able to put enough tenants into it to be able to make a return to pay your taxes, your land taxes and so forth. And there's more and more office blocks in particular starting to become empty because people are downsizing, they're moving into other places. It's a slow process, and I think it's not today, but over the next 10 years, as these leases mature, tenants will say, well, we don't need 3 floors, we only need 1 floor. Yeah. And that will mean there's a lot of pressure on landlords.
Yeah, there's Echo asks a question, is it worth holding German bonds in case they ever break up with the euro and start raising rates higher to stop Southern Europe debt? Well, maybe 3-4 years ago, I would have said yes, buy bonds, German bonds there, because Germany had less than 60% of GDP in debt. Germany was running a budget surplus, but ever since 2020 and ever since last year, what the Germans, the way they've reacted to the geopolitical crisis, Russia and Ukraine, they seem to be the government seems to be shooting themselves almost in the head instead of the foot. So I wouldn't even touch German bonds personally. What's your view on that, Clive?
I think anyone who holds bonds from any major economy or other economy is going to be, in less than a decade, and I would say probably 4 or 5 years, be looking at something which is now a defunct currency. They will still own the bond, but it will be a currency which is no longer the currency which is being used in day-to-day use of the country in question, and either it will be trading at a very big discount or it'll be worth nothing. So yeah. I don't think bonds are a good idea for a long-term investor at all.
I agree. Chris Conman, thank you for your super chat. And he asks, Clive, if China issues its digital yuan backed by gold, will the gold price then still be easy to manipulate as it is today?
I don't think China is about to issue a digital currency backed by gold. I think it would be a great move if they did, because it would make the rest of the world think, especially if the Chinese yuan became a free currency. It's not a free currency, but if it were to become a free currency and you could trade it and you thought you could genuinely cash it in for gold, people would flock to the hard money. It'd be Gresham's law all over again. People would hoard renminbi and get rid of the other currencies if they believed the promise that China would redeem it in gold. I don't think that's likely to happen, but I do think if we get the CBDC and it doesn't actually work in the way it's expected, we might end up with the gold-backed system, but obviously not with gold at $2,000 an ounce. It'll be gold at $8,000 or $10,000 an ounce. It can't work at the present price.
Yeah, James Hafford this is a little different topic here. He says, do you consider Sunak's in-laws, software companies' involvement with Bitcoin nepotistic? Yeah, I mean, they own Infosys, which is a huge software company, and I'm sure there is a lot of nepotism there. But even prior to Sunak, I think a lot of people made fortunes during the COVID crisis, and unfortunately, yeah, that's I think a symptom of how bad things are, that I think it was Robbie Williams, the singer, he came out on Twitter and he said, I don't trust politicians anymore. I don't trust doctors. I don't trust, he said, I don't trust anyone anymore. And I think this is part of it. Trust has been lost. People don't know who to believe anymore. There's a lot of corruption in our faces, and they just keep doing it. They say, "Oh, I earned $300,000 for giving a speech." That was, I think, Boris Johnson. He just bought a house with no mortgage necessary for about almost £4 million. A guy who was earning £160,000 a year and who always complained that he was hard up. So no, I think eventually people are going to get fed up, and people like you and I and Clive who know what's going on. Yeah, we know what's going on, but the vast majority don't seem to care. Have you got an opinion on that, Clive?
Well, let's put it this way. It's been the way of the world since the beginning of time that those in power see their mates okay. So there's nothing special or new about that. Of course, places like the UK have got a very, very strong anti-bribery act. So bribery's out, but paying somebody over the odds to give a speech is in still.
Yeah, but there is I think she's a dame. I forgot her name, but she made 29 million from some kind of COVID contract, and she put it all offshore in her family's name. But anyway, yeah, they get around it, like you said, Clive. It's very difficult to prove that it's bribery, and maybe the UK and the US politicians and the powers that be, they've had more practice in hiding it than the countries, the poorer countries. Anyway. Echo says gold investments also offer the ability to hold gold via a SIP. I have a company pension which has limited fund options, but will ask if I can transfer 10% of a SIP. Yeah, I mean, there are some SIPs where you can hold gold. And I'm not sure if gold investments still do it. They used to hold gold for SIP, for companies that do SIPs in their vaults. But you need to check with Oliver or Simon Temple. James Hafford says, Clive, I agree with Clive that if gold were to really back the yuan, people would need to be able to demand gold for digital yuan. But it seems very unlikely that China would give up gold like that. Is that what you think?
I think they're keeping the gold for when the currency system breaks down so they can have a seat at the table for the new monetary system, which will emerge Bretton Woods style probably.
Yeah.
And they don't know if gold will be the backing for the new currency at some point, but just in case it is, you've got to have a lot of gold so you get to have your say.
Yeah, and we've noticed a lot of countries, Singapore has been buying a lot of gold this year. They increased their holdings by 45%. Any views on the US gold, the 8,100 tons that they're supposed to have? Do you think that's all been leased out, and or that it's really there?
Well, first of all, we've got to hope that these gold bars aren't filled with tungsten, because a lot of it's been there for a very, very, very long time, long before they had testing equipment to find that out. But let's assume that they're real bars. I don't know for sure how it works, but I can see a scenario where they would lend the gold. It stays in the same place, of course, but they'd lend the gold to JP Morgan, for example, and maybe JP Morgan would then on-lend it to a gold miner who would then sell it to raise funds for its gold mining. And then it's obviously quite important that the gold price does not rise, because if it rises, it's going to leave the gold miner in a pickle, because he'll get a margin call, which the lender wouldn't want. And as the gold comes out of the ground, the plan is to repay what they've borrowed in gold to JP Morgan. JP Morgan repay it to the government. But of course, the gold bars themselves will not be moving at all. The gold bars will stay where they are. It's just the ownership of those gold bars, which ostensibly are moving around, and it might be owned several times over, because the Federal Reserve, if they've lent them out, and I'm saying if because I don't know that's happening, but if they've lent them out, they will be keeping they still own the bar they've lent out, and they're keeping the bar in their safe as collateral, so it's still theirs. Now because it's been lent, inverted commas, to JP Morgan, for example, they would be able to lend it to somebody else who can sell it. Now someone else has bought it, and they've effectively got a claim on that gold. But at some point, that gold will, at the right price, will come back to where it started from.
Yeah, no, that's right. And the other thing about the gold is that most of the U.S. gold is held at Fort Knox, and I think the West Point Depository. So there might be another one in Colorado. I'm not too sure. But then there's the New York Fed. The New York Fed is a private bank, and they hold, I think, quite a lot of gold for foreign central banks. And so, and the Bank of England as well. The UK, we only have 300 tons as a country, as the UK Treasury, but at the Bank of England, they hold 5,000 tons, which I think it's understandable, I guess, for like the Netherlands, for example. They just came out, I think they just announced a new vault where they're putting 30% of their gold. It came out last week. And actually, the Dutch central banker there is not the head of the bank. He said, oh, in times of crisis, because the reporter was asking me, how come we have so much gold? He said, well, because when everything, hits the fan, the only thing left is gold. It's the only thing that we can trust. And he said, not even the dollar will help us. So the Dutch, for example, they keep 30% of their gold at the Bank of England and 30% at the New York Fed, and they keep 30% at the Central Bank of Canada, because I guess they remember World War II when they were invaded by the Germans, and the Germans probably took some of their gold. So they want to have they want to keep it safe across the channel and across the Atlantic. But I think it could be a big mistake, because if we have a major crisis, and I don't know which crisis is going to be, the UK and the US could just say, well, we're going to just keep this gold. That's a possibility. I mean, they've kept Venezuela's gold here at the Bank of England.
Well, exactly. And actually, now you mentioned Venezuela, can I read to you a letter I got by telegram from a friend in Venezuela? Because it shows what happens when you have a very high inflation rate and a communist government. It's only a few lines, but he wrote to me as follows. A rich country governed by corrupt criminals, communists. We are currently kidnapped in our own country without freedom of expression, without free market, and how many ills have been added. The news does not come through the TV about what is really happening. Almost nobody knows. Television channels are sensitive and cannot convey anything of what is really happening in this country. There is no national production. There is no free market economy. There is no access to foreign currency. There are no imports. There is no food in the supermarkets. There is no supply. There are no spare parts for the vehicles. And those that are at a very high price. What little there is costs a lot of money. And to make matters worse, there is no money in the banks. The money is disappearing for smuggling paper money and falsifying counterfeit bills.
Yeah.
Broken English, because he's a Spanish speaker, but that's what he wrote to me. If things go really wrong, we might be facing something similar.
Well, and what he mentioned about communism and stuff, and it doesn't seem to matter what party is in power, not just in the UK, but also in the US. They keep spending. I mean, the last fiscal year of the Trump administration, I think the budget deficit was 5% of GDP. And don't forget all the QE and the Treasury spending in 2020. uh, and the money supply growth, that was still under Trump. I'm not trying to say Trump is a communist, but things have gone so far that, yeah, here in the UK as well, there's so many things that are like blocked from the news. And yeah, I think we could be on the same track as Venezuela, and that's scary because Venezuela actually was one of the wealthiest countries on the planet back in the 1950s and 60s. I mean, I think it has more oil reserves than Saudi Arabia.
Yes, I do know that. My very first investment in 1975 was in a Irish oil company, which happened to have found the biggest oil field in the world in Venezuela. Unfortunately, it went to zero. So, but
Is that
the oil wasn't really there.
Oh, it wasn't there. I thought maybe the Venezuela
Well,
confiscated the company.
No, I mean, obviously there's a lot of oil in Venezuela.
Yeah.
It's a huge country, but when the communists took over, Western companies withdrew their staff, and then they couldn't fix the machines, and then the oil stopped being produced.
SAS Finance, I thought in New York City, the Fed has underground facility where the gold is stored. Yeah, they have the gold vaults at the New York Fed. And it's interesting because I had a client at Citibank. He worked in the Treasury at Citibank, and he knew I was into gold, and he started buying some gold because I told him about it. And he said, Mario, I go every 3 months to the Fed's vaults to check it. And I said, why? I said, well, we do. And he didn't tell me anymore, but I think it's because Citibank probably owns shares in the New York Fed. So I think they even have on their website, the New York Fed, you can go look into it. They have some really, I'm not saying I love the New York Fed or anything, but their pictures, the vaults is really interesting. So there you go. They keep a lot of gold there. Oh yeah. Someone asked Clive if you think if they introduce CBDCs, the central banks, that would be the end of interest rates.
Well, let me tell you something about CBDCs, which is added to my list about why I don't like them. And this was an experience I had in Italy this week. Many people will recall prior to the euro how you would often get ripped off in petrol stations in Italy because you'd present a note for 500,000 lira, and then they would, especially if it was dark and you couldn't see the color, they would tell you you'd only give them 50,000, or you gave them 100,000 lira, they'd tell you it's only 10,000. That was a very good rip-off trick that they tried back before 2000. And obviously the act I thought had been cleaned up a lot, but I had a couple of experiences on the motorways at the service stations. In one incident, I went to pay with my credit card, and now next time I'll be paying with cash, and this is why I don't like the CBDC. I paid with my credit card, and I immediately got a notice on my phone to say my account's been debited, and that's fine. So we're paying, it's only 50 euros, I'm waiting, we're paying for petrol. And the lady at the counter says, your debit didn't go through. And I said, well, yes, it did. And I showed her my phone, look, it's debited on my phone. Immediately, oh, no, definitely didn't go through. You have to pay with another, try again with your credit card. So I tried again with the same card, and I immediately got a message from my credit card company saying, attempted fraud, we've blocked your card. Okay, I'll try with a different card. Pulled out a different card. Card blocked. Pulled out a third card. Card blocked. All these companies suggesting that there's an attempted fraud. So I finally gave her 50 euros in cash.
Yeah.
Now, I don't know how my argument with the credit card company is going to go when I say if they don't refund me the 50. But that was one example. And I had another example. When you pay for petrol in Italy, the way it's supposed to work, they charge you your card 101 euros, whether you like it or not, that's it. But after you've taken your petrol, that amount of 101 gets changed downwards to the actual amount of petrol you consumed. You pay in advance, literally, that's the way it works. And that worked fine in all the petrol stations. It would come down, I'd get a ticket showing me what I'd paid, except for one where they charged me 101 euros, no ticket issued, no refund. So I went to the cash desk and said, look, what's going on here? And they said, oh, don't worry, in broken Italian or broken English, it'll come through in a few weeks, your refund.
Yeah.
Well, that's fine. But as things stand today, as it stood, I set aside a certain amount of money on my credit card, and lo and behold, I'm 50 euros out because they debited me account, which might never get refunded. And I'm 101 euros out, which might never, or partially, because I spent 40 euros out on that. So this can happen with the CBDC. What happens when you start to use your card and people say, well, it didn't go through, and you pay them a second time and a third time? Well, if you start to distrust the system, you want to have the alternative, which is what I did in Italy. After that, I started paying everybody in cash because I know that things weren't working the way they're supposed to work. And I think we have to keep the ability to pay in cash and not just with the CBDC.
Yeah, I did a video yesterday about the U.S. constitutional silver, the pre-1965 coins, and I have quite a few of those here. I also have the pre-1920 UK coins, and the premium in the US is almost 40%, sometimes more, for those coins. You kind of wonder if people like you and I and like the viewers that see the writing on the wall about CBDC, I kind of wonder if they're buying this as like an escape valve, because you could go and pay with quarters, 90% silver quarters or $50 and dimes. And a lot of people will take that because they're coins, American coins, and they're actually valuable. So that could be the way forward.
Well, the fact is these kinds of coins are recognized worldwide, and particularly in the United States. And if the system melts, you want to have something which people will recognize and will accept. And if you've got a pre-1965 silver quarter or dollar, everybody's going to know simply by looking at the date that it's silver, and they'll take it. If I can't say whether 40% is too much or too little, but certainly it's worth paying up for that certainty that you've got something when the next guy might not have anything.
Yeah. Clive, just to let you know, we've got 3 minutes until we end. I'm going to see if there's more questions here from the viewers. If you guys have any questions, let us know here. We're wrapping up. Mara, don't talk about my stash in Colorado. That's Lord Humongous. Are you keeping the Treasury's gold, Lord Humongous? Are you the one? Clive, your tie is out of place. Oh, he said it's a bit, yeah. Yeah, guys, ask any questions you want. We only got 2 minutes to go here. If you have any more questions, or maybe Clive, you want to say something to the viewers about maybe more like managing your psychology, not just for markets and finance, but in life in general with all that's going on. I think you spoke before about not panicking and just not like being rash.
Yeah, I mean, I think the biggest mistake people are making is having all their eggs in one basket. And if there's one basket where you're making the biggest mistake of all, it's having it all in cash, because you've got a double risk there. You've got it all in the bank, and you've got it all subject to the potential for a currency reset if things start to fall apart quickly. I'm not expecting a currency reset imminently, but I was last September when the gilt market was melting. They solved that. It could come back quickly, but my best guess for a currency reset is probably greater than 50% probability by 2027. But that's not to say it couldn't happen next week if some black swan event happens and they close the banks and the shops get emptied and they have to do something. So don't keep it in cash is my message. Diversify. I also would say, maybe you don't like me saying this, Mario, but I also say don't keep it all in gold or silver. I know you like that, and you're a 100% guy, and I feel there's nothing wrong with it. I think it's not a bad bet. but there's many other things you can buy,
Yeah.
ranging from razor blades to tools and so on.
Yeah, and I even think maybe watches are a good thing to have, longer term, they keep their value, you know. No, I agree with you, but about I have a lot of razor blades and shaving gel and deodorants, yeah, in the spare bathroom. So yeah, that's so let's see if someone is asking a question here, we got a little bit of time. If there is an impasse with the debt ceiling dilemma and banks start failing, what will happen then? Well, hopefully you don't have too much money in the bank. Yeah, it will be.
But
I think gold and silver will go through the roof. Personally,
yeah, I mean, if the banks start failing and you can't get your hands on cash, the question is, will people trust cash at all? I mean, probably they will, but if they don't, you're going to need gold and silver, and it will be time for a reset if that happens.
yeah.
And a reset basically means get rid of the old currency and start a new one.
I keep quite a bit of cash lately. I've been keeping cash, investing in golf clubs. Actually, I did buy a new set of clubs a couple of months ago, even though my game has gone downhill, but it's a nice set of clubs. Just to finish, Clive mentioned the repo, the gilt crisis in October last year, September, October. So I think it started at the autumn or fall equinox, which for some reason there seems to be a lot of currency crisis around the equinox. Don't know why. And then the collapse of SVB was March 15th, which is a week before the spring equinox, and it was also the Ides of March when Julius Caesar was assassinated. So if you add, and that was 6 months after the UK crisis. So if you add, 6 months to March, maybe something in September, but maybe also midsummer could be something, another 3 months, another crisis, who knows? But like, I think we're going to see a lot of these crises, and the central banks like coming like firemen, putting the fire out, but they're going to have to keep using they're going to use petrol or gasoline to put the fire out, and it's going to get even worse.
Yeah, well, crises are like thunderstorms. You don't get a lot of warning. You maybe get a few days warning ahead of it, but they come when they're ready, and you don't know how bad they're going to be. I mean, do you remember, Mario, go back to 1987, when Britain had the typhoon or the hurricane, and the weather forecaster said, we're going to have a bit of strong wind, but don't worry, it's not going to be too bad. And it basically knocked out half of the UK, especially the southern region, and all the trains were not running, or all the major roads were out, the power lines were down, the stock exchange had to close, and so on. And it turned out to be the worst typhoon ever in history, which the weatherman got wrong. That's how I see these black swan events.
Yeah.
The powers that be will tell you it's not going to be too bad, and that it is.
Yes. And I think that was before the weekend before Black Monday, when the stock market in the US dropped 22%. So there you go.
Well, that in part exacerbated the problem, because the dealers couldn't get to the desk on Monday morning, and these faxed orders were piling up from all around the world on the London dealer desks. London Stock Exchange was closed. There was nobody at the desk. And of course, when Tuesday opened, all hell broke loose in London.
Yeah, actually, someone said here, because I don't live far from Sevenoaks in Kent, and someone said Sevenoaks became Two Oaks. Yeah, that's true. Yeah, there you go. Good. All right, Clive, thank you very much for your presence, and I wish you a good upcoming week, and yeah, it will be. Maybe we should buy some popcorn to watch everything. Anyway, and to the viewers, thank you for all the questions, and thank you for your interest in the channel. And I wish you all a very good week too. Take care. Okay.
Thank you very much, Mario. Bye.
Hi, Clive.
Hi.